Hi there, welcome to the Enterprising Conversation channel. I'm your channel host, Rendani. Today we are going to look at how to identify a pyramid, what they call a pyramid scheme or a Ponzi scheme. Recently, the media has been awash with people who have been scammed of their hard-earned cash by smooth-talking fraudsters who promise them heaven and earth only to leave them high and dry. Now, I'm just going to give you a very quick presentation on how to identify Ponzi schemes so that you can make sure that you stay safe and protect your hard-earned money. Now, by way of definition, what is a pyramid scheme? This is basically, in simple terms, it's a business model that recruits members, that generates money by recruiting members and promising them commission or rewards for recruiting other members into the scheme. Generally speaking, they don't sell any product or service other than the so-called investment. Now, the structure. In terms of structure, those who join first form the top tier of the scheme, whilst those who join later on form the bottom part of the pyramid scheme. So it assumes a pyramid shape, hence the name pyramid scheme. Let's look at the legality. It's important to note that all pyramid schemes are illegal. By law, they are illegal in South Africa. So it's very important to underline that. How can you tell? What are the telltale signs? Remember, one telltale sign, one sign may not make a pyramid scheme. So you have to take them in combination. High entry fees. One thing that should raise your alarm is a high upfront fees that you need to pay or invest in order to be a member. A second one, of course, is emphasis on recruitment. If they pressure you to recruit more people, then you must know that it definitely smells like a pyramid scheme. Obviously, I've already stated that there's usually no genuine product. They claim to be selling investment. The other obvious giveaway, and which is our weakness, this is what they use to catch us: unrealistically high return. I mean, they know that almost every person has got an aspiration. We are aspirational. We have got dreams. You want to buy that family car, you want to buy that family house, you want to go on that dream holiday and so forth. So that's why they catch us. You need to stop and think. The next one, complex commission structure. It should be easy to understand how you are going to be paid. If the commission that they claim that they're going to pay you, or the return, sounds very complicated, then you must smell a rat. And again, if you need to understand how the scheme, it should be easy for you to understand how the scheme is going to make money. For example, a tuck shop. You know how a tuck shop makes money. They sell bread, they sell margarine, groceries. They sell groceries, and that's how they make their money. Your scheme, do you really understand how they make the money that they're promising you? Registration status. This is registration with the regulatory body in the financial sector, which is called the Financial Services Conduct Authority. Are they registered? Are they able to supply you with a registration number? Take that registration number, call the Financial Services Conduct Authority and verify. You need to do your homework. Pressure marketing tactics. Are you pressured to bring in more members? Another obvious giveaway is that they will promise you guaranteed returns. Most investment schemes, most legit investment opportunities don't have guaranteed returns. I mean, if they tell you that 30,000 by the end of this month, 30,000 will definitely be in your account, I mean, we are in a free market economy, and the forces of demand and supply are at play, and no one can predict them with certainty. Transparency. Stop and reflect. Have you been at pains to get information and answers to simple questions that you've been asking the project promoters? Another one telltale sign is the tiered investment structure. Gold membership, platinum membership, diamond membership, and that is tied to how much you invest and the number of people that you recruit. These schemes may also use what appears to be very famous people, celebrities, that you are comfortable with, who are well known, and they're just baiting you, because the logic is that you will reason that if such a famous person is part of it and I can see that they're flourishing, they're thriving, how can it not be legitimate? It's called comfort that they're trying to sell you. They also trend towards use of closed up groups like WhatsApp groups, and they want to make you feel as if you are highly privileged to be a member of the scheme. You are favored to be part of it, so you must not let this opportunity pass you by. If there is pressure to join, if they are pressurizing you, you must smell a rat. If it walks like a duck, it quacks like a duck, then definitely it's a duck. Lack of underlying investment to generate growth. If you want to earn money from providing passenger transport services, you have to invest in a car. Straight and simple. Easy as ABC. Now ask yourself, what is the scheme, proposed scheme, investing in order to make or generate the exorbitant returns that they are promising you? Ask yourself that much. Are they investing in anything that is going to generate returns? Some pyramid schemes often disguise as stokvels because they know stokvels many people are comfortable with. We are used to stokvels in townships and in our rural areas. So be careful. A fee or initial investment is usually required for you to be a member of the scheme. It's another telltale sign. Now, disadvantages. Obviously, you are going to lose a lot of money if you join a pyramid or Ponzi scheme. Legal consequences. You are not going to have a legal recourse should you lose money in that Ponzi scheme, because you can't enforce an illegal contract. Ethical concerns. You are going to end up scamming your loved ones, your friends, because in the quest of meeting the targets of making sure that you bring as many people as possible and make a lot of money. False promises. They are going to be making a lot of false promises, making a promise, break it, and then make another one, and eventually they go to ground. You cannot trace them. Now, some of the things that you can do, what is it that you can do as well to avoid being caught in a Ponzi scheme? Ask the promoter for the name of the auditing firm that audits the company. That's very important, because if somebody is looking at their books, is looking at what is going on in the company, then it means that it gives some reassurance. Get the number of the auditing firm, call them and verify if indeed they are auditing the supposed investment company. Talk to an independent third party. Look around and talk to an independent third party. Somebody who's an investment broker, somebody who's knowledgeable, before you rush. Don't give in to the pressure to rush. And remember, as we conclude now, just do your homework. The best way to stay safe is to do your homework. Don't be rushed into parting with your money. Check if the promises of high returns are unrealistic.